Okay, so I get asked all the time, where's the jobs going to come from? It's the services sector. It's the same place they've been even through the mining boom. So what this is a graph of is we look at the various sectors, we start them in 2008, how many jobs have you added and where? So the manufacturers have lost about 160,000 jobs. You've probably not heard that health and social assistance has done about 450,000 jobs. This is a service economy. Mining is 9% of the economy, but it only employs 2%. And so it's a service-led economy that's really important. There's a lot of debate about house prices at present. The Reserve Bank sort of said they don't believe the Sydney data. I've just, instead of getting into the ins and outs, we can go and look at the NABS data. So we're about 20% of the system. We get an independent valuer each time, and then we add up the independent values. We actually say the Reserve Bank is wrong, that Sydney prices are actually up quite a bit, around 12 to 15% at an annualised rate. Melbourne's about the same. Melbourne actually recovery is even better. In our data, Perth is not as bad. That's the official data. But generally what I'm saying is house prices are pretty strong. Since the rate cut, you might have seen the auction clearance rates go up again. So would I have cut rates if it was me? No. Why? Because I think it just does fire up the housing market, and I also would like to have a bit of ammunition in case something else goes wrong. So let's talk a little bit about house prices, because I know I'm going to get asked afterwards anyway. And so what I'm going to say is I think it's really important to differentiate between house prices and apartments. I see these as different markets. So do I think it's a bubble? No. We look at three things. We look at supply demand, we look at interest rates, and then we look at unemployment, the ability to service the loan. So the first thing I'm going to say is, can I explain where Australian house prices are? So if you go into any of the bank's websites and they say, can you afford the house, right? So you type in how much your income is, you type in the house, you type in the interest rate, you don't know it, but behind the mechanism we also have the loan to valuation ratio, and then we also have an asset test. In other words, what we're saying to you is we will lend you enough such that 30% of your income is towards the repayment of interest. After that, you can't. So I have this algorithm that's running the sort of thing. And I can go back to the 80s. And this graph, I've gone back to the 90s. On the left-hand side, the blue line is the actual house prices. The purple line is my internet computer, working them out. And what I see there is basically, whether you think it's expensive, and I've got 2 kids looking for a house, and it is expensive, but can I explain it? Yeah, because that's exactly where you'd expect it to be. If you look at it by various sectors, it sort of says Melbourne might be a bit pricey. It says Sydney is not as pricey, and it also then looks at the others and they're underpriced, basically. So I look at that and I say, well, what really matters, as long as you're not overbuilt, is your unemployment rate. And in an unemployment rate, when we build our models, what we basically find is you start to get stress in the housing market when you get to about 8.5% to 9% unemployment. So as a bank, and I think all the other banks do the same, what do? We look at postcode data. And we look at, if you've got unemployment rates above certain amounts, then we sort of don't like, well, I can't say we don't like you, but we point out someone else down the road has a really good deal. Where are these postcodes? They're typically far north Queensland, they're typically in the Pilbara, Perth, Adelaide, a little bit in Tassie. Not so much Sydney, Melbourne. Okay, supply demand. How do I get an estimate of supply demand? What I do is I essentially look at the change in the population and the change in number of houses, and I look at that relationship over 30 years and I get an average. Are we building more or less? And then I get a line and I look at it. Now, the next chart I'm going to put up shows you a big difference. Everyone's going to look at the black, look at the red. Red, and so the line through the middle there is basically the 30-year average. and it's basically saying all the capital cities, particularly Brisbane, are underbuilt. The apartment market is something very different. Now, the apartment market essentially, I think, particularly the new apartment market, which is what this is, just looking at the local population is probably wrong. Why? Because we know there's a huge influx of foreigners into the apartment markets. Nobody knows how much. We as the banks know it ain't us. So we don't know whether it's cash out of Asia or debt out of Asia. We think it's cash, but we're not sure. What the banks have been trying to say is, well, if I look at that in terms of the long run, I don't want to be overweight this market, so I'll let somebody else have it, which is why they've been all tightening up. The other thing that people talk about is settlement risk. So far, the banks haven't seen, well, we haven't anyway, seen any signs of settlement risk. However, that doesn't make me necessarily feel as if I don't have to worry about it. Because, I'll give you a chart. Now, this might be a bit hard to see, so I'll just start off. The blue line on any of these capital cities is the average of the number of apartments you've been selling for the last 5 years. The red line is how many you sold last year. The green line is how many you basically are about to sell this year. And then the purple line, which sort of scares us a bit, is how many are coming on in 12 to 18 months' time. So it says the issue about settlement risk is more likely 12 to 18 months down the road. Now, do I still worry about settlement risk? Well, I always worry when I see a supply-demand issue like that. But if it's the Asians and particularly the Chinese coming in to land bank, in other words, I've got the money out illegally and I want to have it somewhere where the government doesn't know anything about it, as somewhere that's nice relative to value, and it's not the Chinese pollution problems, and it's a store of wealth for my people. I don't care whether I necessarily turn the lights on, but I do care that I'm not going to be caught up in any corruption issue. So the big question then becomes, what happens if the Chinese, for whatever reasons, decide to sell? That causes me grief. To be brutally honest, if they're land banking, I find it really hard to believe they're actually going to sell. So I'm sort of feeling nervous, but then not feeling nervous, is sort of my bottom line in all this. As a bank, we probably don't want to be any longer. It does mean that there will be a construction cycle that will continue probably for 12 to 18 months' time. I don't expect to see a lot of new projects being put up if they haven't already been approved, but you do have 12 to 18 months worth of cycle still to go. So we are watching that really carefully, obviously.